We are recording and you are free to go.
Very well. Once again, welcome to this webinar for separating employees of Fifth Third Bank. This webinar is about you and benefits that you've already paid for with your taxes. There is one exception, and that's unemployment insurance benefits, which are always paid by the employer. Hi, everybody. I'm Tom Mraz from the Illinois Department of Commerce. And on the screen now are the four agencies who are combining to bring you this information today. I'm thanking Ms. Chris Salmons, head of your employee relations in Cincinnati, for letting us come in and do this. We don't always get a yes when we ask if we can do so. About once every couple of months, we get a no from a large company. The last couple have been large health insurance and large petroleum type companies. Also want to thank Marcus Latham for handling the technical side of the webinar. Now we'll go to our next. Marcus, I'm clicking the screen. The screen is not changing. Would you change it for me, please? Very good. You'll hear from each agency about your benefits, including unemployment insurance. These are federal programs and are available in every state. We will go over workforce locations in Cook County, Illinois, for a location outside of Cook County or in neighbor states. If you happen to live across a state line, drop a note in the chat pod and we'll follow up with you. You also have an employer-specific web page. You'll notice if on the screen, illinoisworknet.com/Fifth Third Bank, with a wealth of resources for layoff recovery. It will contain a recorded version of this webinar and of the handouts if you don't get a chance to grab all the handouts by the end of the meeting. More on that later. I'll just touch now on the WIOA law, that's Workforce Innovation Opportunity Act, and that means an act of Congress that governs many of the benefits. This law covers adults, youth, dislocated workers, and spouses of dislocated workers. A dislocated worker is a worker laid off through no fault of their own. So someone who leaves before the layoff is not laid off and they're not a dislocated worker. Or somebody who's fired is not laid off, they're also not a dislocated worker, and that affects eligibility. Importantly, you have a window of eligibility from your separation date to your next hire date, when you can use many of the services, including training at no cost. In fact, I think all the services, including training at no cost. So this is the time to get that job credential that you've always intended to get. You'll sense the common theme as the agencies go through this, and the theme is you're not facing this challenge alone. All you have to do to take advantage is to engage with us. And now let's hear from Chicago Cook Workforce Partnership.
Hi, everyone. This is Dave Swanson. I'm from Chicago Cook Workforce Partnership. As Tom said, that is the local area that manages workforce services for Cook County. So I'm going to go through these slides explaining the workforce system, which you may have never heard of before unless you've been in this situation before. Most people don't find out there is a workforce system until they're in some kind of a layoff situation. But I'd like to encourage you to make that first call and engage with the workforce system. It's on you to make that call, and we will provide that information, the phone numbers of the nearest American Job Center to you. After that, There are many processes that get rolling, and there will always be a next step for you. Could I get the next slide, please, Marcus? Okay, and that's me. Maybe next slide, please. All right, so I'm going to just give a summary of what the workforce system is and what we do around Cook County. We provide training, business services, coaching, labor market data analysis for all of the high demand and growing industries in the Chicagoland region in Cook County. So that encompasses business professional services, healthcare, retail, culinary, hospitality, IT, manufacturing, TDL, and construction. Those are areas where there are growth, projections of job growth in the next 5 to 10 years. Now, if you could go to the next slide, please. We have our mission and our vision statement, our mission statement and our vision on the screen, but for those just listening, vision of the agency is every person has the opportunity to build a career. Every business has the talent to grow and compete in a global economy. And so we are managing the activities of the American Job Centers. These are places where you can walk in and just as a member of the general public, receive a variety of services related to employment and training. But you as a dislocated worker will qualify to receive a higher level of services, individualized career counseling. That means we will pair you with a career coach, and it can go up to even a training voucher up to $8,000 to help you out with obtaining certification training, if that's something if you determine you need that to take the next step in your career. Next slide, please. All right, so we have a system overview. Yeah, you can just keep clicking through these. This is just providing a summary of all the different things that we do as a workforce system, trying to make everything work together. So you can go to our website. It's called workforceboard.org. That's all you would have to type, just workforceboard.org. And you can access our Where Are the Jobs report. We put out this report every quarter, and it gives you up-to-date labor market information around who's hiring in the Chicago area, in what industries, and where we're seeing the most job growth. So once again, workforceboard.org, and you can find the Where Are the Jobs report. Next slide, please.
Hi, David. We have a question that's in the chat. Is there a limit to when you can request service? Can I wait 1 month and then walk in?
That's a great question. Now, the workforce services, you could actually go obtain those services right now, even before you are laid off. That is not the case for unemployment compensation, the insurance. The unemployment you have to file for on or after your last day of work. But you can go into the Workforce Center even right now, provided you've received a letter stating the date of your layoff. As long as it has your name on it and the fact that you're going to be laid off from Fifth Third, the staff will know you qualify for the higher level of services. I encourage you to do it as soon as possible. What we often see as workforce staff is that people get to their 6th month of unemployment. That's as long as it lasts. 6 months is the last month, and then start looking at the workforce system, start developing an employment plan. And, you know, that's not really the way we've designed it to work. If you go access the workforce system now, enroll in the unemployment insurance, then, you know, you're going to be in a good position to do some planning, some labor market research, polish off the resume. If there's workshops you want to do, you can do that, and then you will be able to implement and carry out your employment plan with your career coach. All right, so Region, getting back to the slide on the screen. Oh, the website here, I'm going to type it into the chat. Someone is asking what the website is. So workforceboard.org. That website is for the local workforce area. There may be some useful things to you on that website, but really the featured website of this presentation is going to be illinoisworknet.com. So I should put that on the screen too. 1 second. Yeah, it's just here. Let me just type it in: illinoisworknet.com.
Slash
right.
Fifth Third Bank.
Oh, slash Fifth Third Bank, right? Great, thank you very much. So there is a company-specific web page, but if you were to, go back to the home page of illinoisworknet.com, that is where you're going to have access to a huge amount of resources that the state has pooled into this website that will help you out if you're in the situation of looking for another job, thinking about the next step in your career, trying to decide if you need training, trying to figure out where the job fairs are in the local area. There's a number of things you can do on the website. I recommend to people that are thinking about getting some kind of certification or training that they go search for the training providers, which is just in that drop-down menu in the upper left corner of the website. Search WIOA training providers, and you'll be able to narrow down by field what kind of training is out there. Most of the schools you can think of that offer technical education or trade school or just certifications related to what you've worked in are going to be available there. They are going to be certified training providers. So I encourage you to do that. I encourage you to look for job fairs and connections to events that are happening around you on the illinoisworknet.com website. Okay, next slide, please. Okay, so it looks like we have a general slide here about rapid response. That's the name of the workshop that you're getting today. It's in webinar format. But what we do is we assemble this team of, it's an interagency team from the state of Illinois, Department of Commerce, my agency, which is the local workforce area. We often have delegates from the American Job Centers on this team. Then we have representatives from the Department of Labor, the U.S. Department of Labor Employee Benefit Security Administration, as well as IDES, the Unemployment Office representatives. That's our rapid response team. And they're all present on the phone right now, and they're going to be delivering their parts after I'm done speaking. Next slide, please. As far as the definition of dislocated workers.
Well, we sort of went through this.
Yeah, sort of went through it. I wasn't sure if this slide would be in here, but if you have a notice of layoff from Fifth Third, you are eligible as a dislocated worker. You don't need to wait till that last day of work. So that is because Fifth Third did send out their WARN notice as required by state law at least 60 days in advance of the layoff event. That's how we know to provide this workshop before the layoff. So that's just that's the legal end of it. Next slide, please. All right. As far as the system that we're using, it's called, it all comes into effect through the Workforce Innovation and Opportunity Act. That's the federal legislation that creates this whole system. So I think we've explained that already, so you can go to the next slide. All right. So this slide is introducing the American Job Centers. Just remember when you go, if you physically go to an American Job Center, bring your ID for sure, and bring your the letter from Fifth Third so that the staff will know immediately what to do with you. They'll know that you're a dislocated worker. And you can go to the next slide. All right. Now what happens when you actually go into the job center is you're going to get a WIOA, W-I-O-A orientation. So you can call and ask when is the next WIOA orientation, and they should be holding 1 to 2 of those per week, so you can get in there ASAP, and from there you will have access to all of the workshops that they offer there, job readiness, resume writing. If it's been a while since you've updated the resume, nobody ever likes working on their own resume, but there's plenty of people who are there to help you, and they're experts in creating resumes. Even workshops around social media, that can be an important component of the job search nowadays, so you find those resources there as well. The main feature of your engagement with the workforce system is that you get individualized career coaching. So you will have someone to sit and strategize with you about your individual path over the next 6 months or year as you search for employment, or consider training, consider what the next step that you're going to take with your life. So everybody's an individual. That's why you'll be developing your own individual plan, just to lay out, here's what I want to do, here's what I need in order to accomplish that. And then you're just going to have someone in your corner to help you execute that plan. It's going to be informed by labor market data, which we have access to. And in particular, in the case of Fifth Third, the Workforce Center staff will know about other employers that may be looking for your group in particular, because it is public knowledge now that Fifth Third is going through these layoffs, and the workforce staff may have made connections with local companies, banks, or other related companies in related industries that are specifically interested in you, the group from Fifth Third. So that's another reason you want to make that connection with that workforce staff. I think I pretty much covered everything. Just so you know, the workforce system is the way that we are evaluated is solely in terms of job placement. It's really that's the only thing that is considered a valid outcome in the workforce system, is either job placement or at least placement into a job training program. But we stay with you until you actually make the connection to the job. So that's the whole point of the system. Next slide, please. Oh, good. We have an IllinoisWorkNet.com slide. So I provided that in chat, but this is kind of what the home page of the website looks like. You could spend hours on the website, literally. It's a huge website. A lot of time and money has been spent creating it. So it's definitely worth it when you have some free time, you know, and you're not physically in the workforce center. You can still be doing something at home. And this is a great portal to employment and training resources. Next slide, please. All right, so detailing one of the functions on IllinoisWorkNet.com, you can find our American Job Centers. You will just go to this Illinois WorkNet Service Finder. It's there as a main link from the home screen, and you'll just be able to filter by your location, find the nearest centers to you. Those of you who don't live in Cook County, you can still come to the Cook County American Job Centers because your layoff occurred in Cook County. Or, alternatively, you can go to the Workforce Center in your home county where you live. You'll get the same exact services either way. This is a federal program, and it's available in every county in the country. Someone had a question about they're going to Wisconsin soon. After this, these workforce services are available in Wisconsin, and they can access those services there as well. So all of that is, you know, is possible because it's a federal program. Next slide, please. Just detailing the company-specific layoff page. This is where you'll be able to access this PowerPoint that we're looking at right now, as well as other resources related to your specific layoff here at Fifth Third. All right, next slide, please. Now, lastly, we wanted to just show you some resources available through the state of Illinois with regards to healthcare and health insurance. There are a variety of programs serving different populations, but we particularly like to highlight the Family Care and All Kids program from the state of Illinois. If you are concerned with maintaining health insurance for kids under 18 for your children, then you definitely want to check out the Family Care Program. They offer very good rates on some solid health insurance, regardless of income. So check that out if that situation applies to you. And they do have a link to the Illinois.gov healthcare portal up on the screen as well. Next slide. All right. More programs. I think this is usually just one page in my normal packet, but there's a variety of programs available for you through the state of Illinois. So make sure to check out the PowerPoint when you access that on the website. Is there another slide after that? Yep, Warrior Assistance Program, breast and cervical cancer. Yeah, these all, Illinois has a huge number of programs that probably apply to your specific situation. And next. All right, I think that does it for my part. You can actually call me personally and ask me any questions that you have, particularly about the local workforce system. You can call the number on the screen, 312-603-0200, and you just ask for Dave, or you can just ask any of the workforce staff, and we'll connect you to someone who can answer your question for sure. So with that, I'm going to pass it on to Department of Labor. Is it, Lisa?
Yes, it is.
Hi, Lisa.
Hi, Dave.
All right.
Hello.
Hi.
My name is Lisa Stromek, and I am a benefits advisor with the Chicago Regional Office for the U.S. Department of Labor Employee Benefits Security Administration, or EBSA for short. And let me tell you a little bit more about us as we switch to the next slide here. EBSA enforces ERISA, or the Employee Retirement Income Security Act of 1974. This is a law which offers protections for both health and retirement plans, which are sponsored by private sector employers. So even though we are an enforcement agency, a significant part of our mission includes education and outreach to employees about their benefit plan rights under ERISA and other federal laws that are related, including COBRA and HIPAA. And since job loss affects benefits, today's presentation will provide an overview of the applicable provisions of some of these laws to assist you in making the best possible choices with respect to your health and retirement. We will start with health coverage and end with a few retirement benefit reminders. Next slide, please. There are several options to consider for health coverage. In the next slides, we'll go over different options, including COBRA, HIPAA special enrollment rights, and rights to individual coverage, which may be purchased, for instance, through the federal health insurance marketplace or independently. And we'll also mention some other programs for government-sponsored health coverage, usually requiring some financial need. Next slide, please. HIPAA, or the Health Insurance Portability and Accountability Act of 1996, provides you with special rights following an involuntary loss of your health coverage, such as after a layoff. A provision of HIPAA, called special enrollment, allows someone who qualifies for a spouse's employer's plan, but previously declined to sign up for coverage under that plan, to enroll outside of the open enrollment period whenever there is a loss of coverage or a life event, such as a new dependent through marriage, birth, or adoption. So because you have an involuntary loss of your health insurance in connection with your layoff, that is why HIPAA special enrollment rights may be available to you. This can be a cost-effective alternative to COBRA if the other employer-sponsored plan, and again, this could be a spouse's employer's plan if your spouse works for a company that offers one, or if you're under age 26, it could be a parent's employer's plan because of the Affordable Care Act. So again, it can be cost effective to special enroll onto another employer plan if that's available to you, because employers usually share the cost of the health insurance premiums for their active employees and their dependents. special enrollment requests may be required in writing. So if you're considering this, be sure to check with the employer to understand their plan's requirements. Verbal requests may be sufficient, but it's good to do it in writing if that's what's required. So the one thing to know is that the coverage under the other employer's plan following the request for special enrollment must take effect no later than the first of the month after the request is made. So even though you have 30 days to notify, remember to request your special enrollment prior to the start of the coming month if possible, to avoid a possible longer break in coverage. Next slide. So COBRA is another law we help to oversee in this office, and the word is often used in conversation as a plan of insurance or type of coverage, but it's actually an acronym for the name of a law which was passed in 1986, and it applies to employers with 20 or more full-time employees. Following a loss of coverage eligibility due to layoff, the COBRA law allows you to continue coverage under the same employer group health plan offered to active employees on a month-by-month basis for up to 18 months, but it's entirely at your own cost. Because COBRA is a direct continuation of the same plan you had as an active employee, everything about the coverage stays the same, including the proof of insurance card that you carry in your wallet, the doctor or provider network, and any progress you've made towards an annual deductible will also carry over. COBRA allows independent elections, so if your employer offers medical, dental, and vision coverage as separate plans, you can elect to continue just the medical, but not the dental, or vice versa. And you also have independent election rights across individuals. So if you have your whole family covered, everyone is entitled to continue the group health coverage through the Fifth Third Bank plan under COBRA. But if you'd like to continue it for just one person and get an appropriate reduction in cost, so for instance, you would pay a single rate instead of a family rate, you can do that. And you can elect it for one person that doesn't necessarily have to be the covered employee. It could be the spouse, it could be a dependent child. So keep that in mind as well. Next slide, please. I mentioned that COBRA can last for up to 18 months, but you should know that it may end sooner. For instance, if the employer ends the group health plan or shuts down operations completely. In such cases, there may be no plan left in existence to continue under COBRA. But assuming that the plan is left in place, the one thing that can and usually does change with COBRA is the cost that you are used to paying for the coverage. So if the employer for active employees covered a portion of the premium and deducted the rest of it from your paycheck, under COBRA they can charge both the employees and the employer's cost share plus a 2% administrative fee. But remember, there are ways to reduce the cost through independent elections. So again, you can choose just one plan if they're offered as separate components, medical versus dental versus vision, or just one person versus the whole family. And the amount that you pay for will depend on what you will elect. You will receive a notice in the mail with all the information you need to decide about continuing coverage under COBRA, including the monthly cost and where to mail the payment. The notice must arrive to you within 44 days. The way that they get 44 days to notify you by law is 30 days to notify the plan, and then the plan has 2 weeks or 14 days to send you the notice. This COBRA election notice packet will either have the return address of your employer if they administer COBRA in-house, or they'll have the return address of a third party that they've hired to take care of compliance for them. So this is usually a payroll service company, such as ADP or Paychex, or it can be a specialized third-party COBRA service provider, such as COBRA Source. So just be aware it'll be a fairly thick packet and keep an eye out for it. You will have 60 days to respond about electing COBRA, starting from the later of the date that your active employee benefits were paid through, or the date of the notice. If you don't want COBRA, you can just let your 60 days to decide run out. You cannot be required to send in payment with your election, and if you do elect COBRA, you will have 45 days to make your initial payment. So depending on how long all of this takes or plays out, you could end up owing for something like 3 months of coverage up front. Going forward, your monthly payment amount is usually due by the first of the month in which you will receive the coverage, but it is considered within grace period if your payment is received within the 30 days of that same month. Keep in mind that the sooner you elect and pay for COBRA, the sooner your benefits will show as active again. Because the administrative time delay involved with sending the notice and the time that you have to make your decision can draw out a little bit, your coverage may show initially as canceled temporarily until your payment is received and posted. However, COBRA is the only option that will cover you back to the date that your active benefits ended, so it will leave you with no break in coverage. Any other plan that you sign up for will only cover you going forward from the date of enrollment. So on the flip side of this, you can definitely also use this administrative time lag to your advantage. Hopefully you're interviewing or looking for work and you'll have interviews lined up soon. And if you're not actively treating a medical condition, you can maybe hold off on responding about COBRA to see if you even need it. And maybe even save yourself that money, because if you do accept a new job before your deadline to decide and respond runs out, you've just saved yourself that money and successfully enrolled onto another employer plan. So again, the way that you can stretch it out is, elect by day 60. So if you still haven't heard back or still don't have a next job lined up, maybe send back your notice saying, yes, I want the COBRA by day 58. They cannot come after you for payment if you don't send it in within the grace period. So if you end up not needing the COBRA, your coverage will just remain canceled to whatever date you were last covered through. No, there will be no obligation. But if you do need the COBRA, go ahead and send in the payment. Sometimes people might find themselves in, a situation where you're in an accident and something you weren't anticipating happens, and if you happen to end up needing to visit the emergency room, and this is all before you've elected or paid for COBRA, just advise your doctor's office that you're in the process of electing for COBRA and request them to hold off on billing, or if you do have to pay out of pocket, hold on to your receipts to submit for reimbursement once your coverage is showing up as active again. And I see that we've gotten a question in our chat pod, so I'll take a moment to clarify the answer for this question. 60 days from which date to elect COBRA? So again, this is 60 days from the later of two events. You really have no control over when the employer or their third party mails you out the COBRA notice. So the COBRA law is written to give you 60 days from the later of the date that your active employee benefits run out. Keep in mind this can be as soon as midnight on your last day of employment, but it may also be paid through a later date, such as the end of the pay period or the end of the month if the deductions were already taken from your pay in advance to cover you through a later date. You may want to clarify that with your HR department or benefits department. What is the actual end date of your active employee benefits? And then you'll see the later of 60 days from your end date of benefits as an active employee, or 60 days from the date that you receive your COBRA election notice in the mail. If there are no further questions on COBRA, we can move on to the next slide. So even though COBRA is often considered to be expensive, the cost is based off of a group plan rate. However, you may also want to research what an individual policy, which can either be sold to you directly through an insurance company based on your individual rating for age and gender, what that would cost and compare this to COBRA. Another alternative that we all still have available is to shop for individual coverage through the Federal Health Insurance Marketplace, which used to be called Obamacare. People who purchase individual coverage through the marketplace benefit from a screening process that automatically evaluates you for financial need-based coverage provided through the state, such as CHIP or Medicaid, or for qualifying for premium assistance or tax credits to help offset the cost of marketplace plans and make them more affordable. And because a layoff usually comes with a reduction in income, you may qualify for some of that assistance. So also know that that losing your job-based health insurance is a special enrollment event, which allows you to enroll in a marketplace plan outside of the marketplace's normal open enrollment period. They usually run that from about mid-November through December now for coverage effective January 1st. And so know that the way that they normally enroll people, if you are considering switching on to a marketplace plan, is that if you sign up by the 15th of the month, your coverage will take effect by the 1st of the following month. Otherwise, you'll have to wait another month before they can process you on for enrollment. And I have some more information about marketplace coverage on the next slide here. To qualify for the marketplace special enrollment, you must select a plan with them either 60 days before, or you can actually just shop for it. 60 days before or after losing your job-based coverage is your window to special enroll. You should keep any documentation of your current coverage and effective dates, as you may need it when you request special enrollment onto a marketplace plan. Again, if you sign up by the 15th of the month, you'll have coverage by the 1st of the following month. Otherwise, it'll treat you as you've signed up by the 15th of the following month if you're in the second half of the month. To learn more about the available options for marketplace, medical, and dental plans, and which providers are in network with any of these plans, you can go online and visit healthcare.gov, or you can call 1-800-318-2596. Again, that telephone number is 1-800-318-2596 to speak with a live person known as a health insurance navigator who can walk you through the different options available under the marketplace. Illinois residents also have the option to visit a website, getcoveredillinois.gov, and that is Get Covered Illinois with the word Illinois spelled out, not abbreviated, IL.gov. There is also a phone number that you can call, which is 866-311-1119. I think they used to have longer hours, 8 a.m. to 8 p.m., Monday through Saturday. I'm not sure if they still have that in effect, but in case the healthcare.gov phone number is done for the day and you really wanted to research it, you could try the Get Covered Illinois phone number instead. My understanding is that the Illinois website is most helpful for screening someone about qualifying for financial assistance, and that the federal website provides more details about the available coverage options, so it's more helpful for comparison shopping, or it's for determining if your doctors are in network with any of the plans. You see that we have a question in the chat pod. If we did not print any of the healthcare coverage information when we made our elections because everything was online, do we have the right to receive it from Fifth Third at no cost? Am I understanding the question correctly that you received electronic COBRA notice and you're looking for a paper copy? It is actually the standard to send out a paper copy just because, keep in mind, COBRA is a law that was passed in 1986. So everything back then was done by mail, including sending in payments for COBRA as well. that is something you should have the right to request, if I've understood the question correctly. Otherwise, maybe you can clarify again in the chat pod. And we can move on to the next slide, where I'll discuss briefly some of the other government programs available. Although you will be screened in contacting the federal marketplace for additional financial need, this is another way that you can find out about the other programs available, such as Medicaid, which is free or low-cost health coverage, which is administered by your state, or CHIP, the Children's Health Insurance Program, which is low-cost health coverage for families with financial need. Despite its name, CHIP covers parents and pregnant women in addition to children, and you can enroll on either Medicaid or CHIP any time of the year if you qualify for these financial need-based options, and your coverage will begin immediately, so no special enrollment is necessary. Each state has its own rules and qualifying guidelines, and in Illinois, well, I guess maybe not Illinois, maybe in every state. You can learn more by visiting the website www.insurekidsnow.gov, so insurekidsnow.gov, or by calling 877-543-7669. And before we leave the topic of health insurance, I'll pause briefly to make sure there are no further questions. Otherwise, we can address them after the webinar concludes. If not, we can move on to the next slide and just discuss some retirement plan reminders. These are brief but very important. So regardless of the type of plan that your employer offers to help you save for retirement, it's a great idea to keep your address updated with the plan if you move, so that you can continue to receive plan mailings and the plan knows how to find you when it comes time to pay benefits. It's usually not very intuitive to stay in touch with a former employer, and certainly you have many other things on your mind, but I can't tell you how many people call my office later in life and they start wondering about a plan that they lost track of when they were very young and not really focused on retirement. And a lot of those issues later on down the road that people run into trying to track down their retirement benefits are very avoidable if you just remember to keep your mailing address updated with them, because by federal law, they generally have to send you something at least once a year about your participation and about your benefits in the plan existing. And they also will notify you in the event they decide to end the plan at any point in time, send you information about your options to move out your money early. Benefits that you have earned for retirement are generally referred to as deferred vested benefits, since normal retirement age for full benefits is usually 65. However, different plans offer different options for payment, and just like health plans, retirement plans must be administered according to a set of written rules. So if you don't already have a copy, or maybe you've misplaced it or don't remember receiving it, you may want to ask your human resources or benefits person for a copy of the written rules. And the formal name of this document is the SPD, or Summary Plan Description. So if you ask for the SPD for your pension plan or for your 401k plan, your benefits service professional will know what you're discussing. We can move on to the next slide. For some types of plans, there's generally two categories of plans. Traditional pensions are otherwise known as defined benefit pension plans, and that's because there's no individual account in your name. Your benefit gets calculated based on a formula that takes into account number of years of service and the age at which you retire. And for the other type of plan, an example of which is a 401k, it's classified as defined contribution retirement plans. This is an account-based plan where you should receive a regular statement in the mail from the bank or financial institution where your account funds are invested, so that you see how your investments are doing. And with these types of plans, such as 401ks, you may have additional options available immediately to you following your termination of employment. Obviously, as long as Fifth Third Bank continues to exist and they continue to sponsor a 401k plan, you can leave your funds with the plan, and remember to keep in touch, update your mailing address. Or you can roll over your account to a personal IRA that you would open up directly with any bank or financial institution of your choosing, or to your next employer's plan if they allow that. And finally, you can request a direct distribution in cash to you, but keep in mind that there can be tax penalties on top of paying the regular tax on a distribution, because monies that are contributed pre-tax are generally taxed when they're paid out. And in addition, participants under age 59 and a half at the time that they're requesting a payment of benefits to them will be charged an additional 10%. So if that can be avoided as an option for you, it's really worth avoiding.
Lisa, you broke up. Could you repeat the additional charge there?
Yes. So IRS rules for 401ks allow you to take a distribution and just pay the tax on the money that's paid out to you between the age 59 and a half and age 70 and a half. And they impose an additional 10% tax penalty if you're younger than age 59 and a half, or if you don't start taking money out by age 70 and a half. So keep that in mind. If you are younger than 59 and a half and tempted to use your 401k money to get by when you're in between jobs, you are going to pay extra for using those funds. So try to avoid it if you can. And the final slide that we have is just contact information for my office. If you ever have questions about your benefit rights, about health benefit or retirement benefit plan situation that you're not sure how to work through, you can go online and send a question into our office via the website that's printed there. And you can also call us toll-free. Monday through Friday, we try to answer as many calls live as possible. So call us on that toll-free number. And on our website, we have a lot of brochures, PDFs with all of our publications on different topics, such as the one here, the questions and answers for dislocated workers about retirement and health benefits. This file can also be accessed in the chat pod, as well, along with some other publications that I've selected about COBRA and what you should know about your retirement plan. And again, we've just included the phone number for the health insurance marketplace in case you didn't get a chance to write it down earlier. So I just want to thank everyone for their time and attention and wish everyone good luck.
All right, good afternoon, everyone. My name is Dan Martinez, and I'm with the Illinois Department of Employment Security. A little bit about unemployment insurance benefits. As I believe was mentioned at the beginning of the presentation, this is a benefit that the employers pay. So this is not something that you have paid taxes for. This is not something that you have earned in that way. This is something that the employers pay for workers upon their unemployment. To be eligible for your unemployment insurance benefit, there is a handout that's titled "What Every Worker Should Know About Unemployment Insurance Benefits." You should definitely take a look at that if you're interested in the details and how unemployment insurance works. But the one thing on this slide that I want you to know is that you must be involuntarily unemployed or underemployed to be eligible. So even if you have a layoff date, and I do not know if those have been set for Fifth Third yet, but if you had a layoff date of June 1st, If you quit or are let go for cause before that date, even if you had a letter saying that you would be laid off on that date, you no longer become eligible because you are no longer unemployed involuntarily. A little bit about the value of your unemployment insurance benefits. An individual can receive a minimum of $51 a week, a maximum of $471 a week. It is based on your earnings over a period of time. Again, that's all determined in that what every worker should know handout that we have available for you. But keep in mind, just for your sake, the maximum. So whether you earn $100,000 a year or $500,000 a year, your unemployment insurance benefit is going to be a maximum of $471 per week. There is a dependency allowance. So if you have a non-working spouse, you could elect to receive a non-working spouse dependency allowance. That would have an additional $15 per week benefit, so at a minimum. So that would bring it to $66 a week total, or a maximum of $561 per week. If you have a child under the age of 18, you could elect to receive the child allowance instead. Children are paid out at a higher rate than non-working spouses, so the combined total weekly benefit amount for the individual and a child would be $77 at the minimum and $645 at the maximum. You are only allowed one dependent allowance. So if you have the choice between a child and a non-working spouse, again, choose the child. Again, it is for children under the age of 18. So even though you may be supporting that college student, they are not eligible. And it is only for one child. So if you have a set of triplets at home, you still only get a one child allowance. Keep in mind that these are gross amounts, so you can be taxed on these. In fact, you will be taxed on these. You can elect whether to have the taxes taken out on each payable week, or you can pay them at the end of the year. The benefit, I think it was alluded to earlier by the Chicago Cook workforce, the benefit is available for 26 weeks in a one-year period. So that's essentially half of a year. And that's what we do is we take your maximum benefit or your benefit amount and we'll multiply that by 26, and that will be the pool of money that you have available for that what's called your benefit year. So when to file your claim? You file your claim once you are officially unemployed. So you can do it the next day, but definitely do it no later than the week after you become unemployed. That will start your benefit year, and that will start the claim process for you to become eligible to receive your money. You file online at ides.illinois.gov. You can also come into a local office for assistance to file. We will point you to a computer and have you sit down, and you'll go online to ides.illinois.gov just like you would at home. The only difference is that we'd be there to assist you and answer any questions. You can find several IDES offices located typically within the American Job Centers around Rosemont. I happen to be in the Arlington Heights office, but there are several in the Chicago area. So you can go to that ides.illinois.gov website and find a local office. You can also call Claimant Services at 1-800-244-5631, and they will be able to direct you to a nearby office and provide assistance on the claim as well. And keep in mind, the offices are generally open from 8:30 to 5 p.m. It can take anywhere from 20 minutes to an hour to file a claim. And so you'll want to be there at least by 4 o'clock. I recommend 3:30 if you're coming in the office to file a claim. I see that there are a lot of questions popping up on the chat line. Again, Marcus, if you can take a look, if there are any that are urgent or particularly relevant, go ahead and interrupt me. Otherwise, I'll answer them at the end. Okay. Information you'll want to gather now in preparation for filing your claim. The first one is your Social Security card. If you do not have it, you can go to a local Social Security Administration office and they'll be able to provide one for you. Typically it takes about 2 weeks, and there typically is not a charge unless you are a habitual loser of your Social Security card, then they start administering a fee. But otherwise, all of you should be able to have your Social Security card ready for your claim. You also want to bring your driver's license or state ID. Then you'll need the names, addresses, phone numbers of any employers you worked for the last 18 months, and any information regarding pensions, retirement payments, and Social Security benefits. Now, Social Security used to be used to impact your weekly benefit amount. It no longer does. So it does not, if you are receiving Social Security, it does not reduce your unemployment insurance benefit amount. Pensions, it depends on whether and this is if you're receiving a pension, not just if you have one off in the future, but if you're currently receiving pension payments, we'll have to make a determination as to whether or not you funded that pension, the employer funded that pension, or both, and if it's both, at what percentage, and that's the amount that will impact your weekly benefit amount. So your payments, they will be paid electronically to either a debit card or direct deposit. So if when you file your claim, you'd like to have those payments directed to your bank account, make sure you have your routing information and your account number. Most everyone will still receive a debit card, even if while filing your claim you elect to receive it as direct deposit. You will still receive the debit card. We recommend that you activate that. In case something goes wrong with the direct deposit, we'll still be able to provide you with the funds.
Hey, Dan, Dan, I have a quick question.
Okay.
Does severance reduce your unemployment amount?
No, it does not. So severance is considered a gift from the employer, and so it does not impact your weekly benefit amount in the state of Illinois. Now, there are certain one-off instances that become a little murky. Some employers have something that they call continuation of payment benefits. And so possibly for a period of time after their separation date, they're still considered an employee and still receiving income and still receiving benefits. They're not officially unemployed yet. They're still considered to be employed at that point. But if there's any question, if an individual has any question as to whether or not the income they're going to receive after their last day of work would impact their unemployment insurance benefits, the first place to start is with the employer. Ask them, is this considered severance? If the employer considers it severance, then the state of Illinois will. All right, I'm trying to control the screen. It seems to be a little slow here because I got off on the wrong. Someone's been moving the screen onto a different slide. Marcus, I'm having trouble going back. Nope, there it all goes at once. Okay, we were talking about the benefits being paid electronically. You'll also want to bring your dependent's Social Security number. You won't need their card, but if you're claiming your spouse is a dependent, you'll need their, of course, name and employment status, Social Security number. If you're claiming that child is a dependent, you'll need their name, their birth date, and their Social Security number. What happens after you file the claim then? In about 7 to 10 days after you file that claim, and I apologize, we're not on the right screen. All right. After you file the claim, 7 to 10 days later, you will receive a letter. It's called the UI finding letter. And it will include your certification date. I'll talk more about certification in a moment. But essentially, every 2 weeks, the state of Illinois is going to require you to get back in contact with us and answer about 10 questions. Those questions are going to be all contained in the booklet, I Filed My Claim, What Happens Now? I'm sorry, I should call it a handout since it's electronic. So I Filed My Claim, What Happens Now? It gives an example copy of the UI finding letter. It gives example questions that you'll complete during that certification date. It'll also contain the monetary determination, so your weekly benefit amount and any dependency allowance. And it'll explain, and here's a copy, here's an example of it. It will give you your certification date. It'll also tell you whether or not you have elected direct deposit or a debit card, and that can be changed throughout the process. You can change that back and forth at the ides.illinois.gov website. So the same website that you're going to file your claim, you're going to create a username and password and file your claim. You'll continue to use that to change your deposit election to direct deposit or to the debit card. And you can also utilize that for your biweekly certification. That's where you would log in and do your certification. So this UI finding letter contains your first certification date. It'll also have the certification day. So it'll tell you whether you're a Monday, a Tuesday, or a Wednesday. If you are a Tuesday, for example, then you can never certify on a Monday. You can never certify on a Wednesday. You have to do it on Tuesday. The reason that's important is because, again, you're going to have to certify those 10 or so questions, and afterwards you are then paid. About 48 hours later, you're paid. So if you certify on a Tuesday, then you're typically paid on Thursday, barring any holidays or things like that. If you miss your certification date, then you need to certify on the makeup days, which are Thursday and Friday. And if you do that, then you won't be paid until the next week. So again, we give you the very first certification date. You'll certify on that day, and then you're responsible to do the math every 2 weeks after that to determine when you should certify again. Let's see here. The very first time you certify, you're going to be certifying for your first week of your claim and the second week of your claim. You will only be paid for the second week of your claim. The first week is called a waiting week. No one is ever paid for that first waiting week. It is not a loss of your 26 weeks of unemployment eligibility, though. It essentially takes 27 weeks to receive all 26 weeks of your eligibility. So you're not paid for that very first time that you certify. And then from that point on, you'll receive 2 weeks worth of payment every time you certify. Again, I stated the best way to certify is online at ides.illinois.gov. You're certainly welcome to come into one of the IDES offices and we can assist you with that. When you do certify at home on ides.illinois.gov, you're able to see all the questions and they'll confirm the questions. If you do not have internet access, you can use teleserve. So it's a touch tone method of certifying. It's a little cumbersome, but it certainly works. So if that's your preference, you can utilize that. And if you have any questions, we have a claimant services, 1-800-244-5653 that can assist you. A little more information about what we do. We also have employment services. I know Chicago Cook talked a lot about the services that are available in terms of resume assistance, interview skills assistance, job retraining funds. That's all part of the same network. We also have some information such as the career information system to help you, determine your career path. Maybe you want to continue on this and you want to see the next step, the next evolution of your career, or you're looking to move to a new one. So it's important to know the different resources that are available to you. So we've covered what unemployment insurance is. We've covered how to file a claim, when to file a claim, and then what happens after that in terms of the UI finding letter and certification. The ongoing requirements are that you must be able, available, and actively seeking work. So those are actually going to be part of the questions that you're asked every 2 weeks. It's important to know that unemployment insurance benefit is not a health insurance, not a vacation pay. So you must be able and available to work. So the able portion means, are you physically able? If unfortunately you're in the hospital for 1 week, 1 day, 1 month, your benefits would not be paid for the day or the week or the month that you're in the hospital. It wouldn't, necessarily, end your claim just being in the hospital 1 day. It's just that you wouldn't be paid for that 1 day. The same goes for being available. So if you already have a vacation planned, if you're going to go out of town for a day, a couple days during the weekday, you are not eligible to be paid for those days. And again, you're legally certifying every 2 weeks that you are available to work. So it's not available to do a job search. We can all look for jobs from the beach in Florida, but you're not here available to work, which is the requirement. So that's the able and available. The actively seeking work we'll show in just a moment. You have to record your job search process. So we want to know whenever you're meeting with somebody in person, when you're filling out information online, when you're communicating with an employer, prospective employer over the phone. That's all part of your active job search, and you need to record that and keep that information for a period of 53 weeks. When you certify, it's going to ask you yes or no, were you actively seeking work over those 2 weeks? And if you say yes, you'll be paid. If you say no, you will not be paid. We do not ask for proof every 2 weeks. Instead, periodically we may ask for proof, and then you'll need to be able to produce all of that. We'll talk more about Illinois Job Link, which was on there in just a moment. I just covered all this. Written work search. I think I have a work search form here. Yes. So the state of Illinois has an official work search form. This is available on the website. It's available at the end of every certification. Every time you certify, there's a link to this work search form in case you need to print out a new one. If you want to receive copies of it, you can just stop into one of our offices and we can give you plenty of copies. You can also electronically record your work search in Illinois Job Link, which I'll come to next. Oh, this is the part-time employment. I'll cover the part-time employment first. One of the questions that often comes up is how many hours per week can I work part-time? And it's not a matter of hours per week, it's a matter of how much you earn. So again, when you certify, the very first two questions are regarding whether you earned any money. You're allowed to earn up to 50% of your weekly benefit amount. And that's just the individual weekly benefit amount, not the total with the dependent allowance. So for an example, if my weekly benefit amount was $300 per week, I'd be able to earn $150. That's half of my weekly benefit amount. I could earn $150 working part-time. Again, doesn't matter whether it takes me 1 hour or 10 hours to earn that, or 20 hours, it's the amount that they're concerned about. So I earn my $150, I report that when I certify, and I still receive my full $300 per week weekly benefit amount. If 1 week on my part-time job I earned a little bit more, say I earned $175, I've earned $25 over my 50%. So it's that $25 that would then get subtracted from your $300 weekly benefit amount. We covered dislocated workers twice. So IllinoisJobLink.com. IllinoisJobLink.com is a job board similar to Monster, Career Builder, Indeed, ZipRecruiter. The only difference is this is run by the state of Illinois. Anyone in the state can use it, but when you file for unemployment, it becomes a requirement that you have an active resume and complete the registration on it. So when you file your claim on ides.illinois.gov, You'll be creating a username and a password to create that claim. At that time, it will automatically create a username for you in Illinois JobLink. It'll be different than ides.illinois.gov. So then you will need to log into illinoisjoblink.com and either create or upload your resume. If you have a resume in Microsoft Word format, then you can upload your resume there. This must be done before the business day before your first certification. Otherwise, you will not be paid. And you will not be paid until the resume is in Illinois JobLink and there is no going back. So again, you don't lose your 26 weeks. It's just that 26 weeks does not start until you'd have that resume active. So you're typically given a grace period of about 7 to 10 days after you file for your claim to enter your resume into Illinois JobLink. But again, if you file your claim June 1st, but it takes you until July 5th to put your resume in there, your 26 weeks of unemployment payments would not begin until July. So that's illinoisjoblink.com. And there's no cost to use it. Again, anyone in the state can use it, but it is a requirement for you. I believe that's the end of presentation. There we go. So let me look through the chat to see the question.
Or looks like another one came in. On the first one, if you do not certify due to vacation for 2 weeks, will the 26 weeks be extended out 2 weeks?
Yes. Yes, it would be. So if, for example, your benefit or your claim period starts June 1st, 26 weeks would take you all the way to the end of the year, to the end of December. But if you have a 2-week vacation in August, so then you would have 2 more weeks in January. So right, and in fact, really what we should actually move away from the 26 weeks. This starts to get a little into the math of it all. But on your UI finding letter, you're going to have a maximum benefit amount. And what that is, they're going to take your weekly benefit amount and multiply it by 26. And that's going to give you your big pool of money for your benefit year. And then as you certify and we pay out money, we're going to obviously subtract it out of that maximum benefit amount. And so that's the amount you're really concerned about for 2 reasons. One, because if you are unavailable for a day here, a day there, or a week here, or a week there, it's not going to decrease that maximum benefit amount. That money is going to remain in there for you to draw upon. The other is, as I mentioned, if you're working part-time and you're withdrawing less than your maximum benefit amount, then that pool of money is not decreasing at the maximum rate. So it's actually going to last longer than 26 weeks. So if you're only taking out, 3 quarters or, every paycheck, every certification, because you're working part-time, it's actually going to last 25% longer than 26 weeks.
And the second question was, how does unemployment benefits work when you're moving out of the state?
All right, so you would still file your claim with the state of Illinois, and then every state essentially works the same way. When you file a claim, you have to then satisfy the job search requirements of the state. The state of Illinois, that job search requirement is that you are registered with illinoisjoblink.com, that you have an active resume with joblink.com, and that you're certifying every 2 weeks, and that you are able, available, and actively seeking work. So whatever state you move to, you're still going to have, your claim is still going to be within the state of Illinois. You're going to be certifying, and you can do that over the phone or online from whatever state you've moved to. But you need to register with that state's unemployment job program. So if that state, say, was California, and California has their own California job board posting, you would need to put your resume out on there, be actively searching for work, and you're still certified though with the state of Illinois, and we'd be the one paying you.
If there's any more questions in chat, could you please type them now?
I see there's some questions about the security of the website. I can't answer the encryption protocols that they use, but it is a secure site. In fact, they've just gone through. IllinoisJobLink.com is part of a software program that's done at a national basis. It's called AmericanJobLink.com, and this is Illinois' branding of it and version of it. They recently have gone through several different security measures, such as the fact that accounts will be disabled if your job seeker account will become disabled if you do not use it within a 30-day period. So part of the rationale for doing that is to ensure that there are not a lot of unused active accounts floating around there for someone to use maliciously. But it also then requires job seekers to utilize it as a source for their job search.
It looks like we just have one final question. Someone earlier had mentioned that they were eligible up to $8K for obtaining a credential. Which agency would that be arranged through? I believe that was for you, Tom.
Message was for me. One would contact Chicago Cook Workforce Partnership and get the WIOA career advisor, and they can go into that. The handout for CCWP for Chicago Cook Workforce would be the thing to grab.
Okay. I just want to say thank you to Tom, David, Lisa, and Dan for their presentations. You can visit your company page for any handouts along with a recording of this webinar at www.illinoisworknet.com/fifth3rdbank. This concludes today's webinar. Thank you.
Can I say one more thing, Marcus? The handouts are on the Illinois WorkNet site right now, right?
Correct.
And so people can go and get those. I just wanted to make that point. Thanks so much.
All right. Thank you again for everybody, and have a great day.